What's that? You just got your monthly mortgage statement and your payment went up $300 a month, and you were told by your lender it was a fixed rate, so why is your payment going up? I get the same call again and again through the course of a month from my clients. And yeah, you likely have a fixed rate loan, so your loan payment itself, principal and interest, shouldn't be changing. But what's happening here is that there's been an increase in property tax or homeowners insurance, or maybe both. And when there's an increase, it'll create a shortage. So that has to be dealt with, has to be paid back, and then the payment has to be adjusted so that going forward, when they come due again, you should not have a shortage. So I thought this would be a good segue into property taxes, property tax credits, and tax exemptions, and assessment appeals. So across the nation, the effective property tax rate is about 1% of market value. And given Redfin's report from November of 23, showing that the median sales price across the U.S. is about $395,000, the typical tax bill is about $4,000. You might be paying less, you might be paying much more than that. Some areas of the country have very steep tax bills. So you want to know what credits or exemptions are available, or what to do to appeal your taxes if you feel the assessment is too high. Now with property taxes and exemptions, there's some very common requirements I see. One is that it's your principal residence, so you won't get these on a second home or an investment property. 2, there might be household income limits. 3, there might be net worth limits. 4, there are annual deadlines, and you might have to apply each year for these programs. And 5, the tax credit or tax exemption amount could be for the full amount, could be a partial amount, could be a set dollar amount. So you want to find out if you're eligible for any of these. And it's an easy way to search. Just search your location, the county, the city, followed by property tax credit. You'll likely find on that first page of results your local assessment office, their website, and they typically have the credits and exemptions that are available to homeowners. So check those out. If there's any questions at all, call that local office. They're generally pretty helpful whenever I've had a call for one reason or another through the course of work that I do with mortgage financing. Now, if you own property and it's your principal residence, you have to make sure that it's listed as your homestead. Most states, if not all, have either a homestead tax exemption or homestead tax credit. With an exemption, that means that a portion of your value will not be taxable. And if it's a tax credit, it should result in either a direct credit to your tax bill, or it can protect you from future property tax increases because there's been an increase in your assessed value. That's the way it works here in Maryland with the homestead tax credit. I talk to people on the regular who have lived in their homes for many years, and they don't have the homestead application on file, and they're likely missing out on a good amount of money in savings on that property tax. So have to check that out. It's easy to look up property records. Most locations do have some sort of a property record search. If you can't find it online, call the local office, ask, hey, do we have a tax exemption or tax credit program for homestead? And is my property listed as my homestead? See, easy as that. Now there are income-based tax credit programs. Here in Maryland, we have the Homeowners tax credit. That's for household incomes of $60,000 or less. You cannot have a net worth that exceeds $200,000, but the home equity does not apply to that, and your retirement funds generally don't apply to that. You have to apply for once a year. The tax credit is based on your household income. It's prorated, but a great program to take advantage of. Many people don't know it exists, despite the fact it's been around since 1975. I continue to tell people on the regular about that program. But it's all about whether or not you take time to look to see if these things are available. And your situation may change as well from the time you bought your house and over the course of ownership. Maybe you've become retired, like there's tax credits often for people who are retired at age 65 or older. You may have had to have already lived in the property for a certain number of years. If you're a disabled veteran, some states you have to have 100% disability as rated through the VA, and that's to be deemed permanent and service-connected, or you can have a partial disability. Here in Maryland, if you are 100% service-connected disabled, it's deemed permanent, you are exempt from property tax, and that's something that can transfer over to your surviving spouse. There was a recent change with that as well back in October of 2022. It now became law that you can apply for this prior to taking possession of the property. So if you're going under contract and you're a disabled vet, you could apply for this. And if you're deemed exempt from property tax, well, it could help save what you need for closing, and also could help you qualify for more home if you're exempt from property taxes. And elsewhere in Maryland, even if you're not 100% service-connected disabled, different counties within Maryland have property tax credits for disabled vets. If you're a first responder active, or if you've become disabled in the line of duty, or if you're the surviving spouse of a first responder killed in the line of duty, there's property tax credits available. If you're buying renovated property, depending what type of renovation was done, if it's historic renovation, in Maryland we have a program that can reduce your income taxes. Or in Baltimore City, there's the CHAP credit, which is the Commission on Historical and Architectural Preservation. That CHAP credit is a 10-year program, and it can transfer over to a new buyer if you sell your property. It can be very advantageous if you're a seller in the future to be able to offer the property with a tax credit. If you're going green, let's say geothermal heating and cooling, or solar electric, there's tax credits available. If you have a high performance type dwelling, it has the LEED or the NGBS certification. So think sustainable materials were used to build it. There's lots of natural light, low energy, low water usage. If it has that LEED or NGBS certification, there's tax credits available. As far as land use, there's agricultural use, which is taxed far below the typical value per acre. In Maryland, they use $500 per acre. I don't think you're going to find an acre of land anywhere these days for $500. If you do, let me know. I might like to take a look at that. There's conservation and agricultural land preservation tax credits. Be sure to review all the requirements of those so you can maintain those credits. But it all starts with a search. Everyone has a computer at their hands. Search by your location, city, county, and property tax credit. Check it all out. Anything you don't understand. A lot of these things you can just submit online, or you may have to mail them in. But call the local office if you don't understand the application process, and generally they're very, very helpful. Now, if you received a notice in your mail about your assessment increasing, well, that typically implies your property taxes will be increasing. So you want to pay attention to the mail. You can appeal your assessment, and there might be a certain window allowed for that appeal. Now, in Maryland, you have 45 days from the date of your notice to appeal, and you can mail this in. You can do, a in-person, like via Zoom type meeting. It's pretty easy to appeal this, but you want to have some evidence to appeal. You have to remember that when assessors are looking at value of property, to establish value, they're looking at properties in bulk. They're not coming out to each individual property like an appraiser would. If you're trying to buy or refinance a mortgage, an individual appraiser is likely going to come out, walk around the property, walk inside the property, take pictures inside and out, take measurements, take notes on the condition and type of materials used to build or renovate the property, and return to their office and pull comparable properties and establish their opinion of value. It's a very detailed report, many pages to it. The assessment, again, they're looking at so many properties, they are just establishing value in bulk, and sometimes this can be incorrect. Example, if you live in an area where there's a lot of renovation taking place and your property hasn't been renovated, it's very livable, it's very functional, there's no type of deferred maintenance, it works for you, but you don't need the latest and greatest that you just saw on the home remodeling TV shows. Buyers that want that type of property, brand new inside and out, they're willing to pay that premium. So if you're living in a property that's not been renovated, you shouldn't have to pay property taxes based on a higher value that doesn't exist. So if you're going to appeal those property taxes, I think if it were me, I would have an independent appraisal done, as it could give you good footing on appealing that assessment and hopefully ultimately lowering your property tax. So if you have any questions on credits, on exemptions, or the appeal process. If I can help you out in any way, click on that link tree in my bio or in the description below. Also, look in the description below for some helpful links when it comes to property tax credits and exemptions here in Maryland, where I'm located.